Ghana is known as the land of gold, a nation that shines with courage, that rises above history, that meets every challenge with dignity and...
Picture this, a nation sitting on some of the world's most valuable gold and cocoa reserves, shaking hands with one of the fastest growing economies on earth, cameras flash, contracts are signed, and suddenly a $1 billion trade pact is set in motion. Not just another deal, but one that could tilt the balance of power in global finance. This isn't just about Ghana exporting cocoa beans or India sending back finished chocolate bars. This is about something much bigger. A bet that Africa, led by Ghana, can finally move beyond being just a supplier of raw materials and step into the financial spotlight. But here's the twist. The real story of this pact is not only about trade, it's about money flows, investment risks, power plays, and the quiet financial revolution happening between Africa and Asia. And as we dig deeper, you'll see why this billion-dollar handshake might just reshape the entire future of African finance. And to understand how we got here, we have to rewind to see why Ghana, of all countries, became the stage for this high-stakes game. Ghana isn't new to bold economic experiments. In fact, the country has spent decades bouncing between IMF bailouts, resource booms, and political promises. By 2022, its public debt hit unsustainable levels, inflation skyrocketed, and the currency, the cedi, was one of the world's worst performing. But while the headlines focused on collapse, something else was brewing. Ghana was quietly positioning itself as West Africa's financial hub. Its banks were becoming more digitized, fintech startups were raising millions, and the government was rethinking how to attract foreign investment. The $1 billion pact with India isn't random, it's a calculated step. Ghana wants to show the world that it's not just waiting for IMF loans anymore. It's hunting for strategic partnerships that unlock trade, build industries, and most importantly, inject fresh cash into its struggling economy. And here's the kicker. The deal isn't just Ghana's survival strategy. For India, it's an entirely different game, one tied to finance, influence, and global positioning. So what exactly does India want out of this? India's economy is booming. It's one of the fastest growing in the world, but that growth comes with a hunger for resources, markets, and influence beyond Asia. Enter Ghana. For India, Ghana is a gateway into Africa's $3 trillion economy, but it's more than just access to cocoa, gold, or oil. Ghana offers something India needs even more: financial connectivity. Think about it. If India helps Ghana modernize its agriculture, energy, and banking through this $1 billion pact, it's not just selling tractors or setting up factories. It's tying Ghana's financial system closer to its own. That means trade flows denominated in rupees instead of dollars, Indian banks opening branches in Accra, and investment pipelines that bypass Western-dominated institutions. This is India's silent financial strategy: reduce reliance on the US dollar and expand the rupee's role internationally. And Ghana, with its regional influence, is the perfect testing ground. But this new financial experiment could either make Ghana a star player or expose it to new risks. And to see how big this could get, we need to zoom in on the industries the pact is targeting. Let's start with cocoa, Ghana's pride and curse. It's the second largest exporter in the world, yet the country earns far less than it should. Why? Because most cocoa leaves Ghana raw, while Europe and Asia profit from the finished chocolate industry. Here's where India steps in. Part of the pact includes investments in agro-processing plants. That means more cocoa will be processed into chocolate inside Ghana, creating jobs and keeping value within the country. Then there's gold. Ghana recently overtook South Africa as the continent's top gold producer. The pact includes new financing for mining infrastructure and refining, with Indian investors playing a major role. But the real revolution is in finance itself. India is proposing credit lines, joint banks, and fintech collaborations. Imagine Ghanaian farmers using Indian-built digital platforms to access loans in local currency, backed by Indian investment funds. This could create an entirely new financial ecosystem, one that makes Ghana less dependent on Western lenders. But like every financial revolution, there's a catch, and to see what could go wrong, we need to look at Ghana's debt crisis. Ghana's debt is already sky high. In fact, by early 2023, it defaulted on most of its external loans. So why take on a $1 billion deal with India? Isn't this just another trap? Not exactly. Unlike IMF loans with strict austerity rules, India's investment pact isn't just about lending. It's about joint projects and shared profits. The structure looks less like a loan and more like a public-private partnership, but here's the tension. If Ghana doesn't manage these projects wisely, the debt problem could deepen, and critics argue that replacing Western debt with Indian-backed obligations doesn't change the core problem, it just changes who Ghana owes money. 2. This is the gamble. Ghana is betting that this pact will generate enough real economic growth to pay for itself. If it works, the country could finally break free from the debt cycle. If it fails, it risks swapping one dependency for another. And this financial gamble isn't happening in isolation, because behind the scenes, there's a bigger geopolitical battle brewing. Here's where it gets even more interesting. Ghana's $1 billion pact with India isn't just about two countries. It's part of a global chessboard where every move counts. China already has a strong grip on Africa with massive infrastructure loans. The West has its IMF and World Bank influence. Now India is stepping onto the board not with bulldozers and highways like China, but with finance and trade deals. This strategy makes India look less like a competitor and more like a partner. It appeals to African nations tired of Western strings and Chinese leverage, and if Ghana succeeds with this deal, other African countries could follow, creating a wave of India-Africa financial alliances. But here's the million-dollar question. Can Ghana really handle being the test case? To answer that, we have to look at the country's biggest advantage and biggest risk. Despite all the risks, Ghana has one thing going for it: trust. Investors see it as one of Africa's more stable democracies, with strong institutions and an entrepreneurial population. That's why India picked Ghana first instead of a riskier state. If the pact works, Ghana could become the financial gateway of West Africa. Imagine a future where regional trade is settled in rupees and cedis instead of dollars, where fintech startups link Indian and Ghanaian markets, and where investment flows no longer depend solely on Western approval. But success isn't guaranteed. Inflation, political shifts, or mismanagement could derail everything, and that's why the world is watching this pact so closely, because if Ghana pulls it off, it won't just transform one country, it could reshape how finance works across Africa. At first glance, Ghana and India's $1 billion trade pact looks like just another economic agreement, but beneath the surface, it's much more. It's a financial experiment, a gamble on whether Africa can take control of its resources, build industries, and write its own financial future. For Ghana, it's a chance to escape the debt cycle and rise as a financial hub. For India, it's a chance to expand influence and create new financial systems beyond the dollar. And for the rest of the world, it's a wake-up call. Africa is no longer just a playground for outside powers. It's becoming a serious player in the global financial game. This $1 billion handshake might be the spark that lights Africa's financial revolution.
What most people don't see are the tense, closed-door negotiations that shaped this $1 billion deal. Sources close to the talks reveal that Ghana's finance ministry pushed for long-term credit lines and agricultural investment, while India demanded stronger guarantees on repayment. At one point, negotiators debated whether repayment should be in US dollars, Indian rupees, or even Ghanaian cocoa and gold. In the end, a hybrid system was agreed upon, a sign of how experimental this pact really is. But here's the kicker. If more African nations adopt rupee-based trade, this could quietly weaken the dollar's global dominance. A small move in Accra could echo all the way to Washington and Beijing. And while politicians debated financial flows, ordinary people were wondering, what does this mean for us? Section 8. The farmer's story. Meet Kwame, a cocoa farmer in Ghana's Ashanti region. For years, he's sold raw cocoa beans to middlemen who flip them to international buyers. Prices fluctuate, payments delay, and Kwame never truly benefits from the global chocolate industry. But under the new pact, Indian investors are funding processing plants in Ghana. That means Kwame's beans could be turned into chocolate bars right in his hometown. Suddenly, his product is worth triple on the market. For farmers like him, this isn't just about trade policy, it's about survival. If the pact delivers on its promise, Ghanaian farmers could see more stable incomes, better technology, and access to financial tools like microloans backed by Indian banks. Yet, skeptics warn that if these plants are owned entirely by Indian firms, profits could still flow out of Ghana. Which leads us to the real question: who gets the biggest slice of this $1 billion pie? Section 9. The banking gamble. Banks are at the heart of this revolution. Ghana's banking sector has seen turbulence, collapses, bailouts, and restructuring. But India's plan involves setting up joint banks and fintech collaborations that connect Ghanaian customers directly to Indian financial systems. Picture this: a Ghanaian small business owner applying for a loan on an Indian-designed mobile app, processed instantly by a joint Ghana-India bank. Sounds promising, but experts warn of hidden risks. Linking Ghana's financial system so closely to India's could expose it to currency shocks, policy changes, or even cyber vulnerabilities. Still, for many in Ghana's business community, the benefits outweigh the risks. Access to new credit could unleash a wave of entrepreneurship not seen since the country's independence. And speaking of independence, this pact raises old ghosts. Section 10. Echoes of colonial trade. History has a way of repeating itself. In the 19th century, Ghana, then the Gold Coast, was exploited by colonial powers for gold and cocoa. Resources flowed out, while little wealth stayed behind. Critics argue the India deal risks becoming colonialism 2.0, with a new power extracting value under the guise of partnership. But Ghanaian officials push back. They say this isn't the old model of extraction. It's co-investment. The difference: Ghana is demanding stakes in processing plants, joint ventures in banking, and a say in financial systems. If enforced, this could make Ghana a co-owner rather than a mere supplier. The big test is whether leaders stick to these promises when the money starts flowing. Section 11. The Indian perspective from India's side. This pact isn't charity. It's cold, calculated strategy. India is betting on Africa as its next growth frontier. By 2050, Africa's population will double, with a rising middle class hungry for goods, services, and credit. India wants to be there first. For Indian companies, Ghana offers an entry point with stability, unlike riskier markets plagued by conflict. And for India's government, this pact boosts its global image as a partner rather than a predator, contrasting with China's debt trap reputation. But make no mistake, Indian investors expect high returns. This isn't a donation, it's a business move with geopolitical spice. Section 12. Voices from the street. Walk through Accra's bustling Mokolo market, and you'll hear mixed reactions. Some traders are hopeful. If India brings factories, maybe our children won't need to travel abroad to find jobs, one woman says. Others are wary. We've heard these promises before. Where is the proof it will help ordinary people, not just politicians? The truth is, public trust will be the make or break factor. If Ghanaians see real benefits, jobs, stable prices, better credit, the pact will be celebrated. If not, it risks sparking backlash like other failed trade experiments. And Ghana isn't the only country watching. Section 13. Ripple effects across Africa. If this pact succeeds, it won't just change Ghana. It could inspire a wave of India-Africa trade pacts. Nigeria, Kenya, and South Africa are already in talks with Indian firms. Imagine an African financial ecosystem tied not to Western banks, but to Asian partners offering flexible credit lines and new technology. This could accelerate Africa's long dream of financial independence, but it could also divide the continent, creating rival blocs, one tied to India, another to China, another still under Western control. This isn't just economics, it's the new battle for Africa's financial soul. Section 14. The two futures. Let's fast forward 10 years to possible futures emerge. Future 1. The success story. Ghana becomes a regional financial hub. Farmers like Kwame earn stable incomes. Ghanaian chocolate brands rise on global shelves. Indian banks thrive in West Africa, and the city stabilizes thanks to strong trade flows. Other nations copy the model, and Africa gains leverage in global finance. Future 2. The collapse. Factories stall, profits leak abroad, and debt piles up. Ghana's people see little benefit, while Indian firms dominate industries. Protests erupt. governments change, and the pact becomes another broken promise in Africa's long economic history. Which future wins? That depends on decisions being made right now, behind those closed doors. Section 15. The human face of finance at its heart. This $1 billion pact isn't just about numbers. It's about people, farmers seeking fair prices, traders hoping for stable currency, young entrepreneurs dreaming of building startups that connect Accra to Mumbai. For them, finance isn't abstract. It's food on the table, it's a school for their kids. It's the difference between opportunity and despair. That's why this pact matters so much. It's not just a deal between governments. It's a test of whether international finance can finally serve ordinary people, not just elites. Conclusion. The story continues. The Ghana-India $1 billion trade pact is still in its early chapters. But already, it carries the weight of history, the hopes of millions, and the scrutiny of the world. It could be the seed of an African financial revolution or another missed opportunity. One thing is certain, the outcome will ripple far beyond Ghana's borders. Because in this billion-dollar handshake lies a bigger question: can Africa write its own financial future, or will it remain at the mercy of outside powers? The answer is unfolding right now, and the world is watching.